Countdown. 3, 2, and okay. 3, 2, and 1. Joining us with market analysis here on Ag Day, Jim McCormick with agmarket.net. So we did see some strength in the grain trade on Tuesday, Jim, and a lot of that basically coming from lower than expected crop ratings, right?
Definitely. Bean ratings dropped a point. Corn really surprised the market, down 3 points. That's probably giving the bulls a little bit of encouragement that the government will be lowering that yield a little bit when we get released the numbers on Friday. So that brought the broader buyers in full base on both the corn and the beans. The wheat market did struggle a little bit, even though they did drop the crop ratings in the spring wheat. Michelle, the biggest problem for wheat right now is we need some demand. We're cheaply priced, but we're still not getting those exports.
Yeah, kind of a disappointing close in the grains for as strong as we started. What do you think in terms of retracement levels first off? How much do you think we can push this market here, trying to maybe put a little bit of this crop concern weather premium back into this market?
Well, right now, Michelle, we actually hit some pretty critical levels here in the overnight. The corn market went right down to the downtrend line as well as the 200-day moving average and failed at it. The bean markets also went right up to its 50-day moving average and kind of failed at it. So those are 2 points, essentially, the last night / today's highs. They're going to be the critical points to get through. We'll see if they're able to do it. One thing we got to be monitoring is, the crop report a year ago, they did lower the yield on both the corn and the beans. They slashed the corn ending stocks by over 200 million, and that did not feed the bull. In essence, corn market proceeded to drop about $1 between the August number and the September WASDE number, and the bean market topped slightly a few days after the August WASDE, and then proceeded to drop over $2 till it bottomed out in November. So producers out there need to be very cautious about the bull market being fed by this number release on Friday.
So let's talk a little bit about how much smaller you think the crop is. Below 177 now on corn and 51.5 on beans, but how much lower?
I think you had to go at least 1 bushel on the corn. I don't think the government would go more than that, but I think 1 to 2 is probably where we're at. And I think the beans 0.5 to 1. If you get that bean yield, Michelle, cut by 1.5 bushels, or that corn yield drops by more than 4, the balance sheet gets really, really tight, and that could stimulate some more kind of price action to ration demand.
Yeah, and speaking of rationing demand, though, we did see some China business on Tuesday. We actually saw some business in both corn and soybeans on Monday. So there must be a little bit of a concern by this market or by end users.
They're definitely a little bit concerned right now. I think, our crop ratings are declining, but also what's going on in Europe. Europe's dealing with a lot of extreme heat and lack of moisture, just like the United States. So, they don't have that source of grain potentially. And obviously the Ukraine is getting some grain out of the country, but the reality is they're not even close to exporting that grain volume they were doing pre-war.
Okay, well, thanks for joining us, Jim McCormick with agmarket.net. You can see our full analysis at agweb.com. More Ag Day coming up. Okay, so we'll do the longer one now, Jim. All right.
I stumbled a little bit. I apologize.
No, I have those days too. Believe me, you. Okay. So here we go in 3, 2, and 1. Tuesday's market closes mostly higher in grains, mostly lower in the livestock futures. Jim McCormick, agmarket.net, is joining us with analysis. And let's talk about the push in the grain trade. Some gap higher overnight, at least in the corn market, as we saw a much lower than anticipated crop rating there on Monday, right?
That's definitely what's driving it. The market was looking for steady, maybe 1 point drop. We got 3 points. So, the money came into the markets relatively aggressively today, Michelle. What the trade is worried about, or a little bit more confident, I guess I could say, is with these drop in the ratings. They're believing that the government will lower that yield when they update their WASDE numbers on Friday. And more than likely, this crop is getting a little bit smaller. We are definitely hearing some dryness issues, especially the further west you go, pollination issues, a lot of tip back, corn ears that did not pollinate. So it's something we need to definitely keep an eye on as we get a little bit further down the cycle, as we start getting the crop tours going full bore.
And Jim, last year in August, we did see a pullback on yield by USDA, but they're usually not very aggressive, especially because we won't have field surveys yet. So what do you anticipate on Friday? How much will USDA trim these yields?
Well, last year the government was pretty aggressive cutting their yield in August, but since they already made that cut off trend yield earlier this year, we're looking for about a bushel drop in that corn yield. So nothing earth shattering, but we want to kind of, remind producers out there, we did have a pretty good cut in like I said, in the yield a year ago. They ended up cutting the carry out to a little over 1.242 actually, I think was the number. So they had a pretty good downward revision, but that did not feed the bull market. Instead, the corn market proceeded to lose $1 from the August WASDE number to the September WASDE number. So it's something the producers need to be careful about. And, assuming a bull market will be fed, even if the yields are dropped. So if you do get a bump up and you haven't made some bushel sales, you might be prepared to sell a rally on that number on Friday.
Yeah. So what do we need really for the funds to come back in here and keep buying this thing? How much lower of a yield do you think, or kind of surprise would we need either in the WASDE or something coming up, or what are they watching technically to get back in?
Well, I think what you're really going to need to see, Michelle, at least on the fundamental side, they're going to have to get this yield probably closer to 174. You get a 174 yield, that'll drop the essentially projected carryout closer to 1.11 billion bushels, and then that'll bring the money back in. Otherwise, you got to get some demand back into the market right now. We've seen some light demand here and there, but the reality is we probably haven't seen the demand the traders hoping to see once the Ukrainian war came in. The other thing we need to keep an eye on is what's going on in the macro front. When the Fed started raising interest rates, they essentially told the funds, hey, we're rooting against you. Our goal is to keep prices down. When the funds are long commodities, they want the prices to go back up. So, seeing the Fed maybe slow up raising interest rate, that may be the big key to actually getting the fund money back into the commodity sector.
Yeah, it's all about money flow, that's for sure. What about soybeans? We got a big push here, not only from, the weather, crop ratings, but the soybean meal market has just been on fire. And talk about what that is attributed to. Is that a demand push at this point?
I think it is pretty much a demand push. And really what the problem right now is it's lack of supply. End users, plain and simple, looks like they did not get all their needs covered as we get to the latter part of the year. And now we got this dryness issues propping up around portions of the country. That is really limiting the amount of bushels producers who have bushels left to sell are willing to sell till they get that quote unquote $1 million rain. In the meantime, you've got animals to feed. That's forcing the price of meal up, which is also driving the price of beans up. August beans, which are in delivery, actually made a new contract high today as a short squeeze. And now with that happening in the August, it's now catching a bid in the September because the bears that have been in a September contract are now worried that they could get squeezed like the August contracts. So that seems to be fueling the old crop beans as well as meal.
Yeah, we're seeing those bull spreads working in both the meal and in the soybeans themselves, which is always a good indication here of strong demand. We've also seen some export business here recently, both in corn and soybeans, and China's been a buyer here. We'd had rumors of that. Do you continue to think they're going to be a player in this market?
I believe so. I know there's a lot of concern, with what happened when Nancy Pelosi was over there last week, and Chinese are definitely not happy about it. But the reality is they've got people to feed. Inflation is still a problem around the world. And the big supplier in the world right now in Europe is having problems. Obviously, we are getting some grain out of the Ukraine, Michelle, but not near pre-war levels. And then more importantly, what's going on in Europe? They're dealing with dryness issues and heat issues, actually record heat at times, just like the United States are. So that crop is getting a lot smaller. So, if you are an importer or food, or you need to buy food to feed your population, and you're starting to feel like you cannot, essentially count on European grain, it will force buyers into the United States until they get until potentially the, late winter, when the early spring, when South America harvest is on. So the United States could be in a very good position to feed the world, at least near term.
Yeah, that may be why we saw Italy and buying yesterday in the corn market, which I don't know if I have ever seen. What are you watching technically here in the soybean market, or what are the fund or technical traders watching here? Last time we did get like almost a 68% retracement, but we couldn't go any farther than that.
Right now, I think, Michelle, is the real near-term key on the corn right now is, can we take out the overnight highs? That was right against the downtrend line, as well as the 200-day moving average on the spot corn market, on the December corn market. November beans went right up against their 50-day moving average. If we can get through those levels, I think you will get some more technical push, potentially short covering going into the report on Friday.
Yeah, I don't think we even got a 50% retracement on the last up move here when we were trying to put weather premium back in here a week or so ago on the corn. Soybeans did a little bit better. All right, let's talk about the wheat market. We did see a 6% drop in spring wheat crop ratings. We traded it initially, and then the market kind of faded in the wheat, or at least ended off session highs. Kind of disappointing, Jim.
Incredibly disappointing for the wheat traders right now. But to me, when you look at the chart pattern, it feels like we're trying to hammer in a bottom. I think in general, we're some of the cheapest wheat in town. Now, what we just need to do is get some actual buyers to show up and come into the market. But if I'm a wheat wheat trader right now, I'd much rather be on the buy side than the sell side at these price levels.
Okay. What about the livestock markets? We did see a very strong day yesterday, a setback today. Was that about what was going on in the feed sector, or was that just some routine profit taking?
I think technically, Michelle, we were overbought, so a little bit of routine profit taking, as well as the higher prices in the feed side. With grains going up, meal going up, that also encouraged a little bit of profit taking. Overall, you got to be very happy. The trend overall has been very good to the upside. Demand overall, I think, has probably been a little bit better than what people thought, just on the export side, even despite the strong dollar. And even domestically, the reality is a lot of people are worried about a recession, and there's no doubt about it. The GDP is struggling, but when you saw that jobs number last week, and we're got employment at about 3.5%, pretty much the best employment we've seen in 40, 50 years. That will keep the demand, I think, relatively robust, on the exports, on the domestic side as well.
Yeah, it really felt like yesterday the cattle market was kind of trying to trade that really strong jobs report, as you mentioned. We did have strong cash trade, though, last week as well. Do you anticipate we'll be able to see some strength in the cash cattle trade continue?
I think it should continue. I mean, overall, the trend's been up. Like I said, the consumer demand's been relatively strong. We got a few weeks out to Labor Day weekend, but I think weather-wise, it's going to be beautiful. After some extreme heat the last couple of weekends, we've got a great weekend coming up. So hopefully that will keep the demand strong as we go into the latter part of summer.
And let's end up on the hogs, which October got just shy of the contract high again yesterday. And then we did see that market have one of the highest closes it's ever had and then set back. But do you think those areas will be taken out here? Will the funds push that thing, especially since, that lean hog index doesn't look like it's cooled off yet?
Right now, I think you got to be optimistic. They're just going to try to take it out. The charts still look very friendly. Like I said, the funds are pouring money into it. I would be a little bit cautious to producers. Look at your break evens. You get levels, you need to lock them in. Don't be afraid to buy puts. But right now, I mean, it feels like all these livestock markets want to trend higher at the moment.
Okay, thanks for joining us. That is Jim McCormick with agmarket.net.